I am Aarti Krishnan. Welcome to episode 12 of Question of Money. In this episode, we will discuss what are the kinds of accounts you need to be a beginner investor. If you have recently joined an organization in a new role, you would have had many private banks making a pitch to you for opening your salary account. Usually a salary account is nothing but a savings bank account with some benefits thrown in. There will be an ATM cum debit card, there may be an accident insurance cover offered to you, there may be a credit card if you are eligible for one. But a simple savings bank account is not enough to get you started on your investing journey. There are three kinds of other accounts that you need in order to make a beginning to your investing journey. What's a sweep account? It is a savings bank account that is linked to a fixed deposit with the same bank. When you open a sweep account, you can set an instruction with the bank that whenever your bank balance crosses a particular figure, the amount is swept into a fixed deposit with the same bank. So what is the advantage of a sweep account? It is that you don't idle money in your savings bank account at the rates of 4 or 5% that most banks offer. The money that is a surplus in your account beyond your stated amount, that will be swept into a FD with 7 or 8%. So even without your taking any action, you will be earning a higher interest with a sweep account. The sweep account also works in the reverse. Suppose there is an auto debit or a payment hitting your bank account, automatically the FDs that were created are liquidated and the money is brought back into your savings account to meet the payment. This can lead to some complications in your account statement. When you look at it, it can look a bit all over the place, but it does not matter because ultimately you will be earning a much better return on your surplus funds. A Demat account is an account run by depositories in India where all your financial assets are lodged in electronic form. So it not just contains your shares, even bonds that you buy, sovereign gold bonds, exchange traded funds, even your insurance policies can be lodged in a Demat account nowadays. This is why every starter investor needs to open a Demat account. A Demat account usually comes with a trading cum brokerage account. Now you may wonder why you need a trading account, because you are not going to be dabbling every day in the stock market. It does not matter. If the Demat account is a depository for all your assets, the trading cum brokerage account actually allows you to transact in these assets. Anytime you want to buy or sell shares, bonds, etc., you will have to use the brokerage account. Leading banks in India such as ICICI Bank, HDFC Bank, SBI, they offer you something called a 3-in-1 account where your bank account, your Demat account and your trading account are all linked to each other, and whenever you make any transaction, it can actually make the transfer seamlessly. There are also brokers, standalone brokers, who offer you the facility of a Demat cum broking account. Zerodha, Grow, Motilal Oswal, Kotak, these are some of the big brokers with whom you can open trading cum Demat accounts. However, in this case, you will have to link the account to another bank account so that the transactions can happen seamlessly. So if you decide to invest in mutual funds, there are two types of plans that you will have to choose from. One is a regular plan and another is the direct plan. The regular plan is a plan where a distributor or an intermediary helps you execute your transaction. When you go for a regular plan, brokers or platforms like Funds India can help you open an account and transact in it. When you transact through a regular plan, you are actually incurring an additional commission for the execution facility that you enjoy, and therefore you will have a higher cost and a lower return as a result. There are also many execution platforms nowadays that allow you to invest in direct plans. Before investing in direct plans though, you should know how to choose a mutual fund, which category to go for and all this. Which are the direct plans which are commonly used? There are many. The common ones are Kuvera, Grow, Zerodha, Coin and so on. Opening a mutual fund execution account with any of these platforms can help you get started very easily with your systematic investment plans or SIPs, as well as lump sum investments in mutual funds, which you can also track on the same platforms. Now, besides all these platforms, you may also choose to open a NPS or National Pension System account. and a PPF or a public provident fund account. These are for youngsters who are thinking long term and would like to plan for their retirement. We've already discussed NPS in a very detailed video earlier. Do check it out to know what benefits it can bring you. We'll cover PPF and other small savings schemes that you can use in an episode that comes later.